Is there simply a lack of catalyst to push gold out of its current range? Joining me today is Carley Garner. She's the co-founder of DeCarley Trading. Carley, welcome back to the show. Thanks for joining us from Las Vegas.
Thank you. It's always fun to be here.
So, Carley, you recently wrote that gold has been trading range-bound, which is no surprise, but what's it really going to take here to break out of this range?
Honestly, I mean, that's a great question. It hasn't really done much of anything since 2013. Everybody in the back of their mind has the 2011 chaotic rally up to 1900 in their mind. So every time gold pops up a little bit, everybody gets excited. But the reality is there's been a hard ceiling around like 1360-ish in that general area. It's a little messy, but it's really had a hard time getting above that. And my guess is we're probably not going to get above that anytime soon, especially this time of year. Seasonally, the market tends to peak out in late February. And if you roll things back a couple of weeks, gold did happen to find a high, at least on this particular move on February 20th. So, I mean, it's kind of following the seasonal pattern. And unless something really outrageous and surprising happens politically or something just completely unexpected, I really don't see anything that can push gold above that 1360 area, at least for now. Maybe later in the year things will be different, but for the next handful of months, I think we're capped at about 1340 to 1360.
All right. Well, another interesting observation you bring up is that the gold and dollar have actually moved together in the same direction 45% of the time in the last 180 days. So why the breakdown of the usual negative correlation, and can this last?
Yeah, so I mean, this is an interesting find. Everybody almost always assumes that if gold goes up, the dollar goes lower and vice versa, and that almost always is the case. But we do see some breakdowns of that relationship every once in a while, and as you mentioned, we are seeing that now. I'm a lot better at pointing out those patterns and actually explaining why they happen. I mean, there's so many moving parts. My best guess is the U.S. is at such a, when it comes to the interest rate differential, the U.S., you know, you can get a lot more for your buck putting money into U.S. Treasuries. And so I think that's drawing a lot of people into buying the dollar and a lot of money overseas into the dollar. So I think that's what's really pushing the dollar up above and beyond what maybe it normally would be, is just money coming in to find the higher yields. Because if you look at sovereign debt around the globe, most of it's yielding negative or, you know, or very low yields. And in the U.S., you can get 2% or so on a 10-year note. So I think that's what's keeping the dollar up. And the gold is following its usual fundamental and seasonal patterns. And I think that's what's causing it. But then again, you know, it could be there's hundreds of things working.
Well, I guess that's my follow-up question. If not the dollar, then what are we looking at to gauge gold's direction going forward here?
Well, I think eventually that relationship will go back to normal. Nothing ever lasts forever. It probably is. I mean, my best guess is we continue seeing this sort of disconnect between those two markets, at least for the foreseeable future. But with, you know, at some point in the next 6 months to a year, I'd say we're going to start going back to a more normalized market.
Carley, I have to throw in a Palladium question. Do you think that the recent spotlight on Palladium and rhodium are taking some interest away from gold?
You know, every once in a while we start hearing stories about some of the other metals. The reality is, like from a speculator standpoint, those markets, even if you have an opinion and even if you're right, it's hard to make money in those markets because they're so thinly traded, at least on the futures side of things, and it's just not as convenient to speculate than some of the other things. So, I mean, I think when I see stuff like that, surely there probably are some really, you know, long-term plays for
but there's talk of there's talk of $2,000 Palladium now.
I've seen those. I mean, I am not an expert in Palladium by any means. I wouldn't be shocked to see that sort of thing, but I probably wouldn't try to place a bet on it.
Okay.
I'll stick to gold.
Any feelings on silver right now, Carley?
I believe silver and gold I kind of put hand in hand. I think they're going to continue to be relatively correlated. So say with silver, I believe that probably we have a little upside in the next month or so, but similar to gold, I think the upside's capped. Right. So, I mean, before anybody jumps on the metals bandwagon, at least in gold and silver, I think they should really consider the fact that the upside's probably limited and the downside's probably wide open. So you want to be careful with that.
Well, what I hear on the silver front is, well, it's so cheap now, so shouldn't I be really loading up here?
Sure. I've been hearing that for years, and it's true. I mean, I remember it wasn't that long ago we had $50 silver. It's hard to remember, but it really wasn't that long ago.
2011.
So it is relatively cheap if you look at it that way, but let's face it, silver, like gold, really hasn't found any type of catalyst in years, or at least not one that holds. So for the time being, for now, I still think that's going to continue to be the case. I think we just kind of troll around here at relatively cheap prices, but I don't see any game changers in the near future.
All right, Carley Garner, I always appreciate your thoughts. Thank you so much for coming on.
Thank you.
And thanks for watching. We'll be back tomorrow.